Hello, everybody. This is Dan Ushman with TrendSpider here. It's February 23rd, 2020. The world's kind of crazy, and we're here to have a very special and interesting Sunday chart show. And this one I'm calling the Options Edition because we've got a very special guest, our good friend Dimitri from Market Chameleon. And Dimitri and Market Chameleon are big in the options world. If you're not familiar with Market Chameleon, it's a really cool tool for options trading. We've had some time over the last year to get to know Dimitri and Market Chameleon, and we think it's a really cool tool that's very complementary to TrendSpider. So, we wanted him to come on here and talk about their method and their process and their technology here on our Sunday chart show. As always, before we get started here, the lawyers make me do it, but I gotta throw up a disclaimer. Obviously, we're demoing software and tools here, so we're not giving trading advice. Don't take it as such. If I throw up a chart and say I like something about it, that doesn't mean you should trade it, right? Unless you do your own homework and decide for yourself. So that out of the way, we're gonna have a pretty simple webinar this Sunday. As I mentioned, our guest here is Dimitri. Dimitri, are you here? Can you hear me? Okay, seem to have lost Dimitri actually here. But we're going to have a pretty simple webinar here where we're going to go into a little bit of a welcome here. We're going to give you a little bit of intro to TrendSpider, and we're going to give you a little bit of an intro into Market Chameleon. And then we'll do some trading talk and some discussion about different option strategies and different things that you can actually do with these various tools. Really quick, just want to make sure. Yeah, there you are.
Yeah. You know what? Sorry, I don't know. I dropped off. I heard you.
You did drop off, but I'm happy you're here. I was getting a little bit nervous there, so I thought I'd have to fill in for you. Okay. But happy to have you back. So I was just asking if everyone could hear us. Or could hear you. So
yeah. Hey guys, thanks for joining us today.
Definitely.
Everybody.
Really quick, I'd like to take a moment, pop into TrendSpider. There's a couple of new features in the scanner in particular that a lot of people ask me about. So I want to take a moment to show you around it. And then we'll pop into Market Chameleon and show you about that. And we'll talk about some possible, some charts, some interesting setups that we found, including some options related stuff. So hi everybody. It's great that everybody's here. It's a pretty big crowd tonight. So thank you everybody again for being here today. So if you can see my screen here, this is the TrendSpider platform I have open here. I'm sure this is familiar to a lot of people by now. But there's a few things that I want to take a moment and highlight here. These are all newer things to the platform, and these are all things that, personally speaking, have really changed how I trade. They've given me depth and visibility into charts I haven't had before, and I've been trading for almost 12 years now. I started towards the end of 2008, which was a crazy time to start playing with the market. So this is TrendSpider, the main interface. And the first thing I want to show you guys here, and this is one of my favorite tools in the platform, is this anchored volume by price tool. And this is a tool that I've been using a lot in my own trading. It's very, very interesting because it allows you to measure where volume was since a particular point in time. And you can see how this works on a lot of different charts. But if I pull up, a chart like this is LOV, which is some weird dating website, and you look at what's happened since the peak, right, which was on March 26th, 2019, you can see that price has sold off sharply. This is actually an 80% sell-off. But you can also see all this buying, right, all this volume down here that's coming in at these low prices. And this is a really cool tool that's in TrendSpider that you can use to kind of identify where there might be supply and demand. My partner, Jake, he's been playing a lot with this CGC. This is a pot stock, right? And one of the reasons he's been into this stock is precisely that. Because from the peak down, forward, you can see that there's a lot of accumulation at these low prices. And it never traded since this bar at these prices before. So this is all accumulation at these lows. That's a really cool tool, and that's something that's only available in TrendSpider, and it works on all kinds of charts. Actually, I'll show you one. This is a chart that I really like. I've been watching this one for a while, and you can see how on this chart, when I stick this volume profile here at the low, right, you can see that all the accumulation that has happened since this rally up and this pullback has all occurred at this little price range here. And that's a lot of demand at these prices for this asset. So that's why I've been watching this chart and seeing if it can continue to go up from here, because the buyers are there, right? And anything that's being sold, they're swooping it up. You can see that it's the highest volume price level the stock has ever had. And that's very interesting. And you can see that at all kinds of assets and all kinds of charts. The other thing, and it's really related to this, that I really want to highlight that's unique in TrendSpider is this ability to anchor a volume-weighted average price at any point you want by right-clicking on a candle. And you can see I have two of these here, right? I've anchored one at the bottom here at the lowest candle, and I've anchored one at the top. And you can see how price has bounced between these two lines, right? For a long time, this is going back to December, right? Every single day, it's just kind of bounced between these lines, poking its head up, pulling back, and so forth. And I wouldn't be surprised if that's what we saw here as well coming up, right? With it continue to consolidate between these two volume-weighted average prices. And these are cool because you can position them at key inflection points, right? So you can put them at a major swing high, a major swing low, an earnings date, a gap, and you can build a range that might be interesting for you to watch. I'll show you one more example of this, and this is FNKO. Right, and FNKO is a stock I actually traded myself, right? Which is why I love to show this off, because this blue line here from the top, which is just anchored at the high, right, and then again at this gap down, was the exact level where price stopped moving up, and that was a signal that a lot of people probably didn't catch, and it's pretty simple. It's just a volume-weighted average price from the most recent major swing high. So I definitely encourage you guys, if you have TrendSpider, to play with these. You can add the anchored volume-weighted or volume profile under indicators, and you can add an anchored VWAP by right-clicking on any candle and clicking on Create Alpha Trends Anchored VWAP here. By the way, the first time you do this, it'll give you a link to the inventor of anchored VWAP, this great trader named Brian Shannon, his blog, where he talks about how he recommends that you use that tool. So that's something that's very cool that I definitely encourage you guys to take a moment to take a look at. Another thing that I just want to highlight briefly here is this concept of a raindrop chart. This is something unique in TrendSpider, and we get a lot of questions about it. So I always like to take a moment during these webinars and just highlight what this is and how these work. And in particular, because today's session is about options, right? I want to just highlight the blue ones, because these are a great indicator of up and coming volatility, although they're not directional. So they're very useful in the options world. But a raindrop is when you take a candle, right? So you take an entire day in this case for Apple, and you divide it in half, right? So the left side represents the first half of the day, and the right side represents the second half of the day. And I actually have a slide that I'll show you about this. But what that means is instead of open and close prices, raindrops have volume-weighted average prices, and that's what the dashes represent, right? When the second half of the day, the volume-weighted average price that people paid for the security is lower than the first half, it's red, and when the opposite is true, it's green. But when they're both at the same level, they're blue. And we call these a blue doji raindrop, and they work just like a doji candlestick would. The idea here is on the doji is open and close prices are the same, right? That makes it a doji. That's a sign of indecision. When a doji occurs at the bottom of a downtrend or the top of an uptrend, it can represent a possible change in direction. Raindrops are a lot like that, but they're volume weighted. And if you think of something like Apple, where you have 3 million, 5 million shares trading hands in a day, for raindrop to turn blue, it takes a lot, right? It's not easy. And that's why these represent just 4% of all raindrops. And that's why they're so interesting to pay attention if you're into trading options in particular. So those are three features that I wanted to touch on. I kind of skipped around on my deck here, but this diagram shows how raindrops are constructed, right? And those are some of the really interesting things in TrendSpider. Last thing I want to leave you before I stop talking about TrendSpider and hand it off to Dimitri to tell you a little bit about Market Chameleon is, we're not just a charting tool, right? And this is something a lot of people don't quite get about us, right? Because our name is TrendSpider and everyone assumes we're all about picking out trends, right? And we are about that, right? And that's a fourth of what we do, right? We also have a market scanner that is pretty game changing. I don't have a ton of time to show it. Maybe at the end of this presentation, we can dive into it. But it's like Google for chart patterns, right? You can have the system literally go out there and search a haystack that you define. So like the Russell or the S&P 500 or a watch list of your own for specific chart patterns and conditions that you'd otherwise have to spend a lot of time manually looking for. We're a back tester, so you can test strategies, right, and see how they work before you gamble your own money on them. And we're a alerting system, so you don't have to stare at 500 charts all day waiting for conditions to be right for you to trade. And all of these things tie into the charts and the automated analysis features we have to save you time. The idea is you can use this market scanner to find charts. You can use a strategy tester to test and develop and refine strategies. You can use the charts and analysis tools to understand the charts, and you can use the alerts to watch them and time your trades for you, so you don't have to be emotional staring at a chart all day, hoping that it sets up in the next hour or 2 hours or 2 days, right? And so you don't have to squint at the chart to try to figure out what exactly the pattern on it is. So that's TrendSpider, and I'm gonna stop talking about it there for a bit. Dimitri, you still with me?
Yep. Can you hear me?
Yes.
Okay.
So tell us a little bit about Market Chameleon.
All right. Thanks, Dan. And, I really like that you use VWAPs. I think it's really important. And we do analysis. We're always looking at the VWAPs, not just price. So I really like that about your application. But just to give you a really quick background of myself and where Market Chameleon came from, before we created this website, we were actually a market making firm. And I'm just going to try to switch right now to my screen. And just let me know if I happen to pop out of there, because that's what happened when I tried before.
Go ahead.
So do you see my screen right now?
Yeah, we see the Market Chameleon interface. Okay.
You see like the Visa. I'm just going to open like an options chain just to make sure that it's okay, because I think I've been dropping out. So you see like a Visa options chain now? That's fine.
It says Visa trade ideas and stock summary.
Oh, really?
Yeah, it's your main window that you're sharing.
Oh, okay. All right. Let me just jump to it here. And just to give you a quick background before you see the options chain now. Does that work?
No.
Let me see if I open the wrong window. Sorry. Okay. I see what I did.
Yeah.
Okay. Now, I have multiple windows open. I just want to make sure you see the options chain now.
Yeah, no, we don't. What we see is trade ideas and stock summary for Visa. Benjamin,
right.
yes,
so,
you can definitely. I'm answering a question. You can definitely get alerts on Blue Dojis. You can scan for them and backtest them. I'll show you at the end after Dimitri gets a chance to show you around.
Yeah, that's right. So just to give you a quick background of myself, before we had the website, we were actually options market makers. So we're members of exchanges, and what we did was actually produce. When you see the bids and offers on the options, well, that's what a market maker does as a role. You're a member of an exchange. You create liquidity in the marketplace, and that's your role as a market maker. And then, just to make a long story short, eventually what happened was that the exchanges went from membership exchanges where you own seats and you're a member to they demutualized and became like these public entities. So after that, actually, the role that we played in got diminished, and then we decided, well, what is there when we dealt with customers? A lot of times what we saw was that they were lacking very good information and data and analysis to make decisions, and that's how we came to create this website. And I'm just trying to make sure I'm on the right page, when I'm navigating, because you're saying that you don't see me.
You're sharing your main window, Dimitri. So you're
Okay.
sharing the one that has the Visa trade ideas and stock summary on it.
Yeah, for some reason though, I've been changing it and it doesn't change on your screen. Just
You're
let me
only
know.
sharing that one window.
Do you see it change yet?
Yeah, there you go. There you go.
You see an options chain?
Yes.
Okay, finally I found the right one. So when you look at, before I get into like an options trade and an options setup, I kind of just want to talk about the process about trading and how an options person thinks. And when I'm looking here at an options chain, well, you're actually, you're looking at different options, different calls, different puts. What you're actually looking at is a probability distribution. So options traders think more in probabilities. What is the likelihood of something happening? So here I just put up Visa. This is what market makers did. You see these bids and offers. That's most likely a market maker is making that bid and offer unless there's like a limit order from a customer. And what this means is this price is based on the probability of somebody thinking that or the market that in 15 days the stock will go above 215. This price is reflecting their probability or their opinion of the stock being below 192. So we really think about probabilities, expected values, and that's kind of what I want to first talk about. Do you see my slider now?
No, you're still sharing the options tree. While you're getting into share, I think that's one of the biggest things that a lot of people don't, especially newer traders when they're coming into trading for the first time. The leverage of options is really attractive, but you have to be right about both the direction of price and the timing of that move. Whereas if you're trading like the stock, you don't have to worry about the timing as much, right? Like you're a little safer there. You don't have to worry about it decaying.
Okay.
So
do you see it now?
Yep. Your slides right now.
Okay. Do you see it moving if I move it? Okay. So when we talk about option analytics, I'm going to talk about three main things. Probabilities, very important. Estimated value versus price. Warren Buffett always says, price is what you pay, value is what you get. And we're going to talk about estimated value versus price in a way where, did price diverge from the expected value of an option? And also we're going to talk about risk and reward analysis. It's very important to know, where you're making money, where you're losing money. And really quickly, when we talk about building financial models, there's different types of probabilities. Sometimes the exact odds, right? So if I flip a coin, I know it's 50-50 heads or tails. I don't expect to see like a truck, right? So I know the odds exactly. It's going to be either heads, tails, 50-50. Other times, though, we might not know the exact odds. And that's where we are building financial models where we have to create an estimate. So if I told you there are two teams, right? Team A and B, which one's going to win? Well, just looking at it, you don't know. Right. And really, you don't even want to bet, because it's just a guess, team A or team B. So then what if I gave you a little bit of data and information? That's how options works and estimating odds work. And what if I told you this, which team will win, A or B? And I said, well, what if I told you team A had a record of 12-0, 12 wins, 0 losses. Team B had a record of 6-6, 6 wins, 6 losses. Right now, you don't know the exact odds, but based on this information, it looks like Team A is more favored than Team B, right? So now you're creating a handicap, right? You don't know the odds, but if you had to bet $1 and they gave you odds of 50-50, I would bet $1 on A if there's no other information available to us. Of course, if you dig deeper and get some more data, like for instance, if you say, well, historically, how often did a team that was 12-0 play a team that was 6-6? How often did team A win? Like, let's say it's like 70-80%, whatever it is. Then you could start kind of creating estimates. Okay, so when And I'm telling you this because when we start looking at the actual data, you kind of understand the difference between estimates and, you know, exact probabilities, okay? So another thing that you want to look at is when you look at data, you're always looking at data from the standpoint, how do I improve my odds, right? Like, what do I think is the most likely thing going to happen if this is happening? Or, you know, so I just kind of gave one example where people use it beside, you know, we use it all over our financial system when we create financial models. And if you're a real estate developer and you're building condos and you're going to build a condo in this county, well, you might want to look at data and say, how are incomes growing in this county? And how do they compare to the rest of the nation, right? That's like a relative value analysis. How's the population growing in this county? And how's the population growing to the rest of the country? How are real estate prices appreciating here versus the rest of the country? So those are analyses that you want to do before you start building the condo, because you want to improve your odds of success. You want to improve your odds of something, because one thing you know is once you built those condos, you're not going to be able to move them, right? So you better make sure you have either a very good reason to build it there, because if you're wrong, you know, it's going to be a big loss. So these are things that you're looking to do to improve your odds. Now, sometimes they're going to contradict each other, right? So you might see population growing, but income's going down. So they're not all going to point in one direction. Okay, so that's important to know, that there's no one metric that's going to tell you that this is it, this is the best, and sometimes they're going to contradict each other. So how do we like relate this to stock? Like, what kind of stock analysis can we do as well? So we can look at different types of metrics, you know, the relative strength of a stock, the seasonality, order flow, fundamentals, etc. So I'm going to show you kind of an example of a few of them before we jump into the option analysis, because sometimes people say, well, you know, how do you like decide on direction or volatility and so forth? So I'm going to jump here and did it come back to my Visa screen, Dan, or no? Am I still on the slide? Hello?
You have to switch by hand.
I have to switch?
Yep.
Okay. Let me see here. Yeah, sorry, I don't know why it's making me switch each time, but that's fine. All right, do you see my options chain right now?
Yep, you're back.
You see the summary?
Yes.
Yeah. Sorry. All right. So here I'm just going to do a quick analysis, just like we did that real estate analysis, and you could see here fundamentals. You could compare Visa to its peers, and here I'm going to just go to like a relative strength. And what this will tell me is like, well, how did Visa in this example, how did Visa do versus the rest of the market? You know, did it perform better or worse? Is it a stronger week? So I'm going to kind of go to 30-day here. You have 90-day, 30-day, 15-day. So here I could see this is Visa SPY, and we're looking at daily returns for the last 30 days. So here I could see that Visa was up more days than SPY, 70% versus 60%. I could see that the average daily return for Visa is 0.29 versus SPY 0.09, so that's higher. And then I could see its standard deviation of those returns. So standard deviation is, we use it a lot to measure the unit of risk. How much risk are you taking in this investment? Then we would take the ratio and say, well, how do we compare it? And we could compare, well, if we took the average return divided by its standard deviation, you know, you refer to it as a Sharpe ratio a lot of times. So that is how much return are you getting per unit of risk. So over here we see that in this situation, the last 30 days, Visa was 22.4 versus SPY 12.4. We see it's much higher. And then we might want to go and say, like, well, what was in the last 15 days? Is the trend continuing? And over here, we see it hasn't been. So it's been weakening. So that's one way of looking at a metric to start, you know, calculating your odds or handicapping. You know, what do you think is more likely to happen? Is it strong or weak? Another thing, what I see here is, and just tell me if you don't see my screen changing right now. I'm just going to go to main screen. Do you see the main screen, Dan?
Yeah.
Okay, so over here, the reason I pulled out Visa is here's another statistic that you could look at, and a lot of traders look at, is seasonality. And like and seasonality is basically looking for patterns or trends during certain times of the year. So in this situation here, I just went over. So these are different ideas from the main screen, and this one's seasonality bullish. So I see Visa here, and here it scanned out a particular trade. This is called a call spread. It's a bull call spread. And the reason it did it is besides seeing that it's a good price, which I'll get to, that there's also seasonal strength between today and the expiration, which is March 20th. So what this is telling me is that historically, in the last 8 years, between starting today, which was February 21st when the market closed, to March 20th, which was this expiration, Visa was up 75% of the time versus down 25%, and its average return was 2%. So these are things that I'm starting to add up to say, unless I have other information, right, to tell me otherwise, what do I think is likely going to happen? And I'll show you kind of what that looks like. Here's a seasonality. So if I put in Visa, and I'm going to switch to seasonality, I'm going to say the last 12 years, starting February 21st, going to, it was March 20th. I'm going to run this. And this is what it's telling me the pattern was. So you could see here, 75% of the historical periods, it's been up versus down, average return of 2%. And another thing here that might be a little bit concerning is this is how it kind of progressed throughout the time. So you see like most of that move is in the very beginning, then it kind of flattens out. But that's kind of giving you some indicators that you could use to start using metrics to start tilting the odds. What do you think is more likely to happen than not happen in the absence of more information? Now, of course, I'm going to come back to this slider, so I think I have to switch really quickly. I'm sorry that it's making me switch like this, but I don't know how to tab from between them. So do you see the slider now, Dan, on the relative strength?
Yeah, you're sharing your presentation again.
Okay, so I just came back to it, and the next thing, even after you look at all these analytics and you put them together, you still want to make a logical conclusion and still look at the news and events and the ideas that right now, if X is happening, what I think, what I think is more likely to happen next. So if like oil prices are increasing, then airline revenue might start decreasing, their profits decreasing. So you still want to be logical, not just use historical data, but see what's going on now and look at like different events. And like for now, for example, you could be bullish, but the coronavirus, if there's a lot of people getting sick over the weekend, even though you have bullish indicators, the historical data didn't know that, and you have to take that into consideration. So now I want to kind of go into valuation and how to value or create an estimated value for an option. And first, I want to create an analogy. Let's say you're trying to invest in a piece of real estate, a house, and this house was for sale for $200,000. Well, are you getting a good deal? Are you getting a bad deal? Are you overpaying? And one way that your realtor or maybe your appraiser, what they'll do is say, well, historically in this neighborhood, what did houses sell for? So they'll go and say like, 215,000, 200, 225, and they'll take an average. So on average, the average home is 210,000, right? So if you're buying it for 200,000, that's like a $10,000 cushion, right? Or 5%. And the win rate over here would be that 66% of the houses sold above 200,000. So you see 215 sold above 200, 200, that's even, 225 above, 195 below. So you could see that 66% of them, they they sold above 200,000. So these are statistics that you could use to now create an estimated value before you do a purchase. Okay, so let me go and kind of show you what that looks like in the options chain, or sorry, on the Market Chameleon.
While you're doing it, I'm just curious, how'd you come up with the name
Market? So
Market Chameleon?
So it's interesting when we're thinking about names. I went to my brother's house and he bought it he had a chameleon, and we're thinking chameleons are interesting because they kind of change colors and adapt to their environment, and they're always changing based on the environment. And like, yeah, that's kind of like what we do. So like, yeah, that is what we do, and that's how we came up with Market Chameleon.
That's kind of cool.
Yeah,
you can see your options chain again.
Okay, so you see the options chain here. So when we talked about, when I showed you that really quick example of the estimated value and your win rate, this is what it would look like over here where we calculate it for you. So this would be like the market price, 363. We think that the theoretical value is 411. So you're kind of getting a discount now for this spread of a 13.2%. And historically, we use, like in this situation, 6 years of data. If you did this spread, that your win rate or it was profitable 79% of the time. So let's kind of I'm going to go back and kind of explain how we get these numbers, because it's important to understand it, before you use it. And I'm going to try to jump back now to that example. So I got to apologize because I don't know how to switch to them except for like logging out and logging back in.
We'll have to get a better, webinars.
Right. So here's an example of an option, right? Like an option, you have a stock price of $100, you have a strike price of 110, you have 14 days to go, and this option's worth, and the market value is $1, right? So how do you know you're getting a good deal, and how do we even price this option? So a few things we know here is that in 14 days at expiration, if the stock is under the strike price, under 110 bucks, if it doesn't increase by 10%, right, this option will be worthless. So if it doesn't go above that price, it's going to be worthless. If it does go above that price, above 110, then the option will have some value depending how high it goes. And that's how so the only thing right now we don't know is like, well, what is the probability of it staying below 110 or going above 110, right? We don't know that for sure. So that's when we use our data to see how frequently does that happen, that it stays below 110 in a 14-day hold period or it goes above 110. And this is what it would look like here. So let's say in the last 4 years, right, I collect all my data and I have data observation 1, over a 14-day period, the stock increased 5%. That means that it'll go to 105 if it does it again, but that's not enough. The option will be worthless, 0. Observation 2, it increased 15%. That means that the stock would go to 115 this time, which means that this 110 call will be worth $5 at expiration. Observation 3, it was down 5%, means it'll go to 95. This option will be worthless. So you do that over and over and over, right? And you say, well, how much is this? What is the expected value of this option? And that's very important. So let's just say I take all the statistics and said, well, it's the percentage of times it finishes below 10% was 70%, right? So 70% of the time it was worthless. The amount of times it was above 10%, that happened 30% of the time. And for an average price of, let's say, $5, on average, it was up 15%. So what is this option worth? Well, to get that estimated value, you take 70% times 0, right? 70% of times 0 plus 30% times 5. You add them up, and that's $1.50. In other words, historically, if you did this spread over and over and over again, right, at expiration, it was worth $1.50 on average. And today you get it for $1. So that's like when you're comparing the expected value versus the market. Does that make sense? Hopefully.
Makes sense to me.
Right.
I actually think it's fascinating.
Yeah. So that's very important, for options traders, especially because you want to see, unless you know for sure where that stock is going, you want to have a statistical edge or a theoretical edge to see that, am I getting a good deal for this stock, or if I'm overpaying, I better have a good reason why I'm overpaying for that option. The other thing about options is that when you do spreads, when you do options, the payouts are not linear. It's not like us when you do a stock, the stock goes up, you 10%, you make 10%, stock goes down 10%, you lose 10%, and you got to be right. With options, it's not exactly like that, especially when you do spreads, because you could make money based on a range of prices. If it goes up, you could make money, and I'm going to show you an example where you make 28%. If the stock stays the same, you can make 28%, and if the stock even goes down a little bit, in this example that I'm going to show you, you could still make 28%. And if you and sometimes you could even make money like where you lose a little bit if it goes down, but if it goes down really a lot, you could make a lot. So let's just look at those types of examples over here. Let me just switch it back now to our screen.
Dimitri, while you're loading it, we had a question for you.
Sure.
Franco asked, how often is the strategy metric updated? For example, call spreads in your platform.
Yeah. So our data is on a 15-minute delay, right? So the data is coming in at a 15-minute delay, but the analysis then is done in real time. So once we get the data, it does go through a timer and analyzes it, but then the analysis will be done in real time. So then I came back. Let me just go to Visa right here, and here's an example. Where I'm right here on this Visa spread, and this is a call spread where you're buying the 200 call, selling the 205 call for 390, and if the stock is above 205 at expiration in this situation, then it'll be worth $5, right? Anything above 205, this spread will be worth $5. Right now, Visa's 208.81. And if it's worth $5, it's approximately 28% return on your risk, right? So in this situation, what we're seeing is if the stock goes up from here, it'll be worth $5, 20%. If the stock just sits here, it'll still be above 205. That's a 28% return. If it declines, you still have that cushion because it could go down approximately like 2% until you break even. So that's kind of like where we look at options. So I'm going to click on this. I'm going to go to the options chain and show you what a payout diagram would look like for this strategy. So once it goes to options chain, this is what, it automatically filled the legs of that trade.
Okay.
Buying the 200 call and then selling the 205 call, 695. And this is what the payout diagram would look like. So right here is where the stock is.
Dimitri, you're not sharing. It must be like a pop-up window or something because you're not sharing anything.
Oh, really?
We just see like the bull put spread and bull call spread.
Let me take a look then.
And then while you're getting that to work, Stephanie asks, does your platform help understand when it's best to close an options trade that it's come up with?
I'll explain that too. That's a good question, but I will explain that.
Okay.
Yeah. Let me just try to find where I'm sharing right now, so I could.
You can share a whole screen if you don't want to keep switching windows.
That's what I try to do. I'm not even sure, what window I'm. Let me just see. I'm trying to close as many windows as I have. I try to open them up just to make. So what are you seeing right now?
Just the main Market Chameleon with the bull put spread and bull call spread.
Oh. Hold on a second. That's weird because I thought I even closed that window.
Yeah. While you're doing that, I mean, Stephanie.
Okay. Can you?
No, you're still only sharing that same thing.
Still?
Yes. But I want to say, nope.
Yeah.
You're not sharing anything now.
Okay.
I just want to say, Stephanie, I think you're on to a huge problem that affects a lot of traders. It took me a long time to get comfortable with like when to get out. It's a lot easier to buy something than to sell it for whatever reason. So I'm also very interested to see how you do that in here, Dimitri.
Yeah. So just let me know if it's moving around, and I really apologize. I'm trying my hardest to
Yeah, you're on Microsoft here. QQQ.
Okay. What about Visa? If I click on this, I should go to the options chain. Do you see that?
No, still on this Visa thing.
Oh, okay. I see what's. Hold on a second. I see what. All right. Tell me what about now?
Yeah, we see options change now.
Okay. So I'm just gonna create that. I think it's just opening up windows that you're not seeing. So I'm buying the 200 call, selling the 205 call, and this is what the payout diagram looks like. Can you see it? Okay, now.
Yes.
Yeah. And basically what this is telling me, as you can see, here's the stock price right here. The stock goes up, you're making money this whole way. Stock stays the same, you're making money. Stock goes down a little bit, you're making money. And then at this point, you start losing. So that's what a payout diagram, it would help you, design a strategy to fit your outlook. Now, look, for example, let's just say if the stock goes down, I think it's going to go down very violently. Then I could start tweaking this. And like, for example, I think it's going to go down like below this price, so then I added another option. And then let's see, if I did like 20%, so you could see now all I'm doing is then just tweaking it to see what range of prices do I want to make a profit on and where do I think it's more likely to go. So to get to the other question, when do you close out? When we price options, we're really pricing it based on what we think it's worth holding it to expiration. So when you're looking at these options, we're always pricing it based on if held to expiration. Like this price doesn't reflect what it might be tomorrow, but what it will be in 20 days. So the only times that you don't want to trade the volatility back and forth because you will kill yourself, because this basically assumes that you're holding it for 20 days and there's going to be volatility ups and downs and what is more likely to happen at the end of the 20-day period. But when do you exit it? If your opinion changed, if something changed and you think that the principal reason that you got into the trade no longer exists and it went the other way, then you might want to exit it. Or perhaps that you look at the trade and you say, hey, you know what, it was undervalued when I put it on, and right now maybe it's overvalued. So you rerun your theoretical value and say, at this point maybe I want to get out. But with options, you don't want to trade a lot because there's a big fee, right, to trading options. You see these spreads, they're big fees. So just over here on this, in this scenario that I'm looking at right now, let me just rerun it on a call spread. You could see here that if you did it on the market, you'd pay $3.90. The midpoint is $3.63. So you can see it's already like, 27 cents away. That's like you want to try to execute as close as you can to that midpoint. The further you go away from that midpoint, it's kind of the more you're giving up to do that trade, because that's kind of considered the market fair value at the moment. You don't want to overtrade options. I don't think you want to overtrade anything really, but with options you got to be careful. Like if you're getting into an option, you got to feel comfortable that you're probably holding it to expiration. Like for example, when I was a market maker and we did lots of trading, right, like every day, we had a lot of positions, and I would say like 99% of our positions, it was held to expiration. Does that
And
help?
do you if you're in the money, do you actually call the shares then?
So as market makers, what we held, if we were hedged. So really, we if we were long a call, we would be short a stock against it, and then it would just offset each other at expiration. But when I say hold it to expiration, you probably want to get out of your option before 4 o'clock, but you don't. By then it's pretty much already played itself out, right? So if you get out at 3 o'clock or 3:30, it's already played itself out. But I guess the point I'm trying to make is that you don't want to overtrade. Now, if you're playing an event, like for example, earnings or something where all you care about is that event, you don't need to hold it to expiration because once the event is done, whatever your outlook was, if you're okay with the price you're exiting, then you could exit.
And are you saying hold to expiration and let them both expire essentially because you're collecting premium on one part of that? Is that essentially the
Well, in this situation, right, you would be in this situation if you're long, right, the 200 call, and you're short the 205 call, and the stock is like 210, they're going to offset each other, right? Because they're both going to get assigned. You're going to buy the shares at 200, sell the shares at 205 simultaneously at expiration. So in this situation, you don't really have to close it. They should just offset each other as long as your broker, is fine with that.
And what would the gain be on this particular trade if it goes perfectly like that and you end up expiring?
Yeah. So assuming that you're buying it, like say for 390 or hopefully better, it expired at expiration will be worth $5 because it's a $5 call spread, so it's $1.10.
Got it. Interesting.
Right. And so that's the thing. You want to see where you stand to gain versus what you stand to lose. You want to make sure if you're combining options, and it could be combining many options, you just want to see if I sell this, buy this, how does it look? How does it look if I expand it? Because you still want to see at what points your risks are, and you want to make sure that if I think this is the most likely area that the stock's going to end up, this is how much I'm going to gain. If I'm wrong and something goes really haywire, what do I stand to lose? So that's when we kind of start using the payout diagrams. But essentially, these are the tools where the things that we wanted to streamline is if you go, finding ideas, right? Using, well, what do I think it's worth, versus what the market is saying, how far did it deviate, and what is my historically, if I did this trade over and over, what were the frequency of my wins, right? So then and that would be a starting point for an analysis. So over here, what we do is we put seasonality bullish plays. These are bullish plays based on just really technical analysis of this. These are like stocks that have just been going up where the 20-day moving average is above the 50-day, 50 days above the 250, and the current stock price is above all of them, right? So these are like bullish plays, and these are bullish option spreads that look like they have theoretical edge and historically high win rates.
It's very interesting.
Right.
I do think coupling, because this is like probability based stuff, right?
Yep.
So, like in the past, this is what's happened.
Yeah.
And coupling this with chart technicals is probably a really cool way to trade. Because you can kind of have a little bit more of a directional kind of bias when you go into Market Chameleon. Is there a way for a user of Market Chameleon to look for bearish trades or bullish? Like, can they configure that?
Yeah, exactly. So if you're just looking for bullish or bearish opportunities, like you could just use these. But we have a lot of just screeners. So a lot of people, once they'll go and just screen for bearish using their own parameters. So I'm not going to get too much into the screeners because that will probably just take us, another half hour. I'd rather like answer questions. But yeah, you can do that. You could either look really quickly for bearish ideas where these are just right now stocks in a bearish trend, and these are option spreads that are are getting filtered out because they look like good bearish opportunities.
Yeah, that's cool.
So yeah, or you
So
could
like
do
on
like
something like Visa, like you and I were talking about this yesterday when we were prepping for the webinar, right? To me, the chart looks at least short and intermediate term pretty bearish, right?
right.
Like I can probably share it really quick so people
Sure.
can see what I'm talking about. But
Do I
like
have
if you look at I think I'm able to just take over it. Yeah, there you go. So if people can see this chart, to me, if you look at this is a raindrop chart, which is our proprietary kind of volume adjusted candles. You've got starting on Thursday some pretty nasty action going on. Right. First off, you have the divergent high, right? So price made a higher high, but the momentum oscillators, and this isn't just RSI. I happen to just have RSI, but this is MACD and everything else. You had that make a lower high, right? And that's negative divergence, which implies that price may be starting to top out or trying to top out, right? And then you see follow through on that divergence, right? So you see first off a very kind of weird day here on Thursday. Right, the first half of the day, all the volume was at the top in the morning, and then the second half there was almost no volume, and price pushed down. It was a low volume sell-off into close on Thursday, and then on Friday you had this kind of raindrop where volume's bottom heavy, right? So it looks pretty bearish. So in using a technical, you can like this. This is pretty simple, but just using something like this, you can get a rough idea as to whether you want to play the upside or the downside, and then use a tool like Market Chameleon to help pick the right options contracts and the right combination of options to play in order to kind of get the best probability of success. And I think those two things together are really powerful. And I was showing you guys this earlier too. This is that TrendSpider anchored volume profile thing. And you can see on this guy here on Visa, like the closer I get to this kind of rally up here, the thinner the volume up at the top is, right? Like from when it reversed last on January 31st and made this run, there's a lot of volume here, right? But then as you stepped up, right, in price, there were smaller levels of volume. There were less buyers at higher prices, right? So that also kind of implies a downside.
Yeah, and then I remember I had a question. Remember and I think we were discussing it the other day, where some of these indicators can predict when there's about to be an explosive volatile move, right, in either direction. But you did mention that, and I think that actually is very interesting for options traders to see that that an explosive volatile move is setting up.
Yep. And somebody in chat a moment ago, I lost track of who asked this question, but they asked about earnings, and that's one of the things I really do like about the raindrops. These are the blue raindrops. So Wayne, you also asked about these. A blue raindrop is a doji, right? But it's a volume weighted doji, meaning that the volume weighted average prices for the first and second half of the period were at the same. And on something like Visa or Apple or Microsoft, something very liquid, right, it's very difficult to form a blue doji, right? Because on a volume weighted basis, that's a lot of trades. I mean, this thing Visa traded 800,000 shares. If we look at like Apple or something like that, right? Like the last blue doji that Apple had on January 27, there are 3 million shares traded that day, right? So that's a lot of trading. And that fact that during that entire day, the volume weighted average price that everybody paid was the same is why it's blue. And these blue things are rare, like I mentioned, and they happen before there's volatility almost all the time. And you can see, like, if you look back on Apple here daily, right, going back to the January 7th low, there's 2 blue dojis here, and then there's this big run up. There's one on the way up, and then there's 2, and then there's this rally down. There's a blue doji, and then there's a rally up, and there's a couple on the continuation up here. And then as Apple's starting to look toppy here, and we're printing divergent highs, we're printing all kinds of stuff that might imply that it may be getting ready to pull back, and it's starting to pull back a bit, right? We have another blue doji kind of form up here. So Blue is Ben. Blue is not for upside or downside, right? It is non-directional. It implies market indecision. So on a volume-weighted basis, everybody all day paid the same price. The market couldn't decide where the price should go, so it stayed the same. And that's like compression that occurs before there's, like it's like, think of it like a spring winding up almost, right? And Angela, yeah, Apple is a very big percent of the market. So I could see using these in, like, what would it be, like a straddle, Dimitri, or a
Well,
straight?
yeah, if whenever you're going to play a volatility in either direction, there's a few different ways to play it, but a straddle, a strangle, a butterfly, an iron condor, these are all different strategies that you could play a non-directional move, but a move in either direction if you think that there's going to be volatility. So there are different strategies around there, and you can filter. You could go into Market Chameleon, and you could filter those different strategies and compare them to each other. But what I think is interesting is that if it has predictive, if it has like a predictive power of saying that there is about a volatile move is coming, the more very volatile move is about to. There's a good chance that there's going to be a very big volatile move.
Definitely. So Angela asked if we could pull up a stock, TNDM. So I pulled up the chart for it, and maybe after I talk about the chart for a second, you can pull it up in Market Chameleon so we can see what that says.
Oh wait, are you asking me?
Yeah.
Okay.
Yeah.
What? Sorry. What was the question?
Can you pull up TNDM?
TNDM. Okay.
Yeah, in Market Chameleon.
Sure.
And while you're doing that, you'll have to share your screen. But Angela, this is a raindrop chart for it. So you had this, from the last time it rallied up, right? It's been hitting points where there's a lot of volume on the way up. It's pretty interesting. It's extended, so I would, I'd be curious to see if it holds or it pulls back a little before it keeps going. But it's a pretty cool looking chart.
Sure. So, and what was the question?
She wanted to see what options, like strangle, straddles, spreads, what Market Chameleon was pulling up for it.
Sure. And like before I do here, I'm going to just
show you
anything
around earnings for it.
I'm just going to look really quickly, like just to see how historically it did around earnings. I'm not very familiar, but like here I'll show you what it's done before around earnings. These are like the last 12 quarters. And before you look at an option strategy, you kind of want to analyze, well, what did the stock do, right? Because the options are the underlying, the options are the derivatives. So I could just show you here, like historically, this TNDM, it opening gaps 58% of the time they were up for an average of 2.2%. The earnings move itself looks like the average has been 0.7%, but 67% of the time you could see that it's been lower over here. And this is its drift. So what we see is that after the opening, it tended to drift lower 67% of the time. The absolute average move, which it just converts all these moves to positives to just see, like, the average move is 6.4%. And you could see here the on the opening gap, but you could see by the end of the day, it's been 9.1%. So what it's telling me is that the entire move is not just in the opening gap, but it tends to move even more after the gap. So, if you capture that entire move, you're waiting till the end of the day. So that's kind of just an analysis of what the stock has done historically really quickly. If you want to analyze it further or go deeper, you can. For the option strategies, let me just see. I'm just going to see if any opportunity. So nothing popped up as an opportunity for us, so on our scan, but you could look at historically what's worked in the past. So let me just take a look. We don't have that many observations on these, so I wouldn't really go, by this. Just it's telling me that the options in that stock might be very wide, so it's very hard to get an observation. So we do we do have a, usually we'll have at least 12 observations, but we do have thresholds that if the options are too wide and we can't figure out like what the price, we're not confident we can figure out what the price is, we skip those observations. So I can't give you a good idea, even historically. Here's like 3 observations that we had on this particular strategy. So unfortunately, let me just take a look how wide these options are.
It's interesting.
Yeah, so you could see they get really wide, and it probably just breached our thresholds that we didn't even, we just skipped it because we didn't think it was good enough. Let me see. On February 28th, it would be. So here they might not be as wide, but historically, yeah. So I don't have enough observations like to run a good analysis, I guess.
That's interesting. If you look at the chart for this symbol, I'll share that if people want to see it on a long-term basis. I just thought this was really interesting. I was just looking at it. So this is on a log scale, right? So on a regular scale or a log scale. But I'm sticking the volume profile at its high right after IPO, its all-time high. And there's like, on a comparative basis, there is very, very little volume on any of this trading up here. Like this has been a huge amount of accumulation at the lows here. So like one would expect that these people are mostly profitable right now and are not are going to sell only to take profits. And there's not a ton of people who are underwater holding shares from way back, sitting up here to create selling pressure as price rises. Which is really interesting. You don't see that in a lot of charts. Like usually, especially on something that's had a long decline, you see that there's a lot of volatility on the way down, right? And that volatility creates, kind of a support and resistance you have to fight through, right? But on this particular symbol, like on the monthly and weekly charts, and I bet you on the daily too, right? There's pretty light volume above, where it is right now, and it's kind of starting to break out. That's pretty interesting. This is a cool chart. Definitely something that has potential.
Cool.
Let's see. Dimitri, you have a couple other requests if you don't mind.
Sure. What's the
CRM and DXCM?
CRM and DXCM, like an earnings? Is this?
Yeah. Larkin asks, can we look at CRM earnings next week? Could be a better example because it's widely held.
Sure. So do you see my screen, CRM, or do I have to switch?
No, I can see your screen still.
Okay. So let me just take a look. This one popped up. So here, we did pop up a few suggestions over here, like a call spread. These are based on back tests and where the markets are right now. So I'll just give you an example here. Like here's a calendar spread selling. Let me do the calendar spread. Might be harder to explain, but here's a credit put spread, right? So the credit put spread is selling the 50 delta put, buying the 25 delta put. If you did it 2 days before earnings and closed out 1 day after earnings, here's the statistics. 83% of the time, this was profitable with an average of return of 37%. So I could just click on that. And here are all the different observations. So you could see here, if you did this strategy, right, sold before, this leg, well, it was after. This is before and after. So this one was a loser. This one was a winner, loser. So you could see here the historical statistics of this strategy. And here's the snapshot. So if you wanted to just see the raw data. But I'm just going to go back from here. Just return to so over here, which one was I looking at? This one. So here we see that historically, that right now the current market's 381. We think it's worth 262. That's a dollar edge. So I would go into here. So it sets up this strategy. I could load it, and take a look at the theoretical value in like the last 6 years during only earnings periods. So you could see if you did this strategy, that's the theoretical end value, right at 260. Right now I could sell it for 381 or somewhere in between here, and then 75% winner. So this is the data below. You know, it looks at the stock movements. It sets it up exactly like this trade, and it looks at the stock movements for each of those earnings, what the stock did and what the end value would be for this trade. Is that helpful?
I think that's super interesting.
Okay. I just can't see the questions coming in. I only see my screen. So
Larkin, if you couldn't see, his screen is sharing. You may have to like expand it. You'll be able to into replay if you didn't see it there. Let's see. And then if you could pull up one more, DXCM.
Sure.
This is Dexcom, and then you know, we're running low on time here, so we'll you know,
sure.
Not be able to take too many more requests, just to make room for some normal questions after that.
Okay, so the DXCM, I don't see a. We're not picking up the. When is the earnings?
Dexcom?
Yeah.
I'm not sure, to be honest. There's a chart somebody requested in the chat.
Okay, we're not picking up that there's a definite earnings, so we don't have an analysis on that.
Okay.
If it was an earnings, unless it was a different type of question.
Okay. Well, I just see the symbol there. So.
Okay.
Stephanie wants to know, how about Trade Desk? All right, one more, Stephanie. That's TTD, I believe.
TTD.
Yeah, TTD, Trade Desk.
Okay. So over here. Again,
you're not sharing it. I see CRM still.
Oh, really? Okay. Hold on a second. What's the symbol?
I'm seeing CRM. Yeah.
What about now? TDD. All right. So right now, we're not picking up any scan that there's an opportunity out there that we're detecting on today's opportunities. But I do see the earnings are coming up. But just to give you an idea, like if you go to the options chain, let's just say you decide to put on a spread like here, February 28th. And just to make it easy, you know, I'm going to say like, well, if I buy this call, like 310, 2.8% out of the money for 1720, right? You could create any strategy. You load that strategy. This is what it looks like. I mean, if you wanted to see what it looks like before expiration, you could also do that. You know, like you could change it and rerun the strategy, or you know, change the implied volatility. But let's just see theoretically is what do we think it's worth? So I'm going to use 6 years of data, right? I'm going to say only earnings periods. So it's only going to look through earnings periods, and it's going to say that historically. So let me see what went on, because that's a very high number. So it looks to me that it didn't actually, it wasn't around that long, right? I only have data.
I feel like they've been around a bit, but I could be wrong. TPD IPO date, let's see.
All right, I only have till 2016.
Yeah, 2016 was their IPO.
2016. Okay, so just based on this data, right? We don't have a lot of data, but I'll tell you what I'm seeing. That this is the historical earnings moves. You know, so went in there, found the historical earnings dates, and it lined up the options, the dates exactly like these options on here, right? So whatever is 5 business days. And here's what it did. You know, one time after earnings, it was down 3.7%. If it does that again, this option is worthless. You know, it was up 4.2. But what I'm seeing is it had really big moves. So it could be vol. You know, I don't know if it'll do that again, but you could see it like 47%, 50, you know, 53%. So here's the distribution. All right.
That's crazy.
Yeah, 0. But it could have really big moves. I mean, usually though, what you see is that stocks that are IPO'd, they'll have bigger moves in the beginning, and then it starts to kind of like, you know, calm down. You know, so you're not going to always see these types of moves, especially in the beginning where the analysts still can't predict the earnings. There's not enough information yet. So So I would be careful with this one because I wouldn't use like $42 as a theoretical value because, how often can it make moves like that?
Definitely.
So you might want to take out those outliers. So it just depends on the stock. Like Microsoft's more developed. This one, you got to kind of like look at the data and say, okay, it's just their earnings maybe blew it away. There's not a lot of analysts covering it. There's not enough information. So the moves are very exaggerated in the beginning, even though these were like in 2018.
So
but certainly,
these moves, is there a way to, I'm just curious from my own use, is there a way to filter out the outliers in the interface, or would you just do that by eyeballing it kind of?
Yeah, we don't have it, right. We don't have the ability to, I don't think you could filter it out here. So I don't think you could filter out these outliers here. We just give you the ability to like kind of see them. I thought we had a download button that you could download from a different, but yeah, you definitely want to look at the data, especially with outliers like this, and say, okay, these I would probably take out, out of the analysis.
Makes sense.
Okay.
So Will asked, what are our thoughts on trying to trade options and securities that are both volatile and have a short history, like space and beyond? Is there a way to manage and quantify the risk of trading these? Let me, from just a chartist point of view, I think the charts are your friend there. I'll let you answer that too, Dimitri. I think it's a great question.
Yeah,
but I really do believe that the charts are your friend. Like something that has not a lot of history, right? Zoom in. Right, so like on IPO stocks, Casper, right, is one that I've been looking at a little bit lately. I've been just zooming into the 65-minute chart instead of the daily chart because it's a kind of big name IPO that a lot of people are trading. So, the intraday chart is all you really have to determine patterns, right? And that's what everybody has.
Right.
So, and then space has just been like, I feel like space has been just incredibly parabolic. So
yeah, and really, the less data you have, the less analysis you could do, and the less, it's like anything, right? How do you evaluate something which has less data? Then you're making more and more assumptions. So this one would be very difficult to price. That's why it's kind of all over the place, and you see the options. But I know that a couple people have just been playing it like with leverage bets, and they'll like go to like they'll look at unusual options volume, and they'll say, well, how much which ones are the volatilities increasing? So they'll do like which ones are the volatilities are up, which ones are the volatilities ranked high, which stocks are up. So they'll keep like narrowing it down. And I know, like, let me see if this space is even on there. Well, actually, it goes down. So on stocks like this, it would be very hard to do the analysis that we've been doing because we don't have enough data. But and look, it's risky, right? But I just seen people play those momentum plays. They'll just watch if the pressure is building up, if there's a lot of volume in the calls, but it's risky, right? It has to be your cup of tea. Those are the, yeah. So what I tried to show you is more of like a spread that's in the money, a little bit more conservative in a stock like Visa, which is like an S&P 500 stock, and it's a call spread. They could still make decent returns and good probabilities, but something like some of these stocks that you guys are mentioning, they're more volatile, they're harder, it's a riskier play.
Definitely.
Yeah.
Well, I appreciate that. It's fascinating. I like your product, man. We don't have many other software vendors that we invite on this show, but I really do think that for options traders, the combo of TrendSpider and Market Chameleon is just killer. It's like peanut butter and jelly. Is the analogy that comes to mind. So I hope everybody here found that useful, and we're really thankful and grateful that everyone chose to spend part of their Sunday evening with us here. It looks like it's going to be a crazy week in the market, so stay safe, manage your risk and be smart out there. You use tools and do your research, and don't overtrade. So good luck to everybody. Dimitri, thank you again. We have
you
one
guys.
last question for you.
Okay.
I know you didn't want to do this, but people are asking for it. It's
Yeah.
probably a good thing for you. But are you willing to throw a coupon at anybody who wants to try Market Chameleon?
Yeah. So right now we're not running any specials, but what I could tell you this is that we've been adding data. We've been adding buying more data ourselves. We've been creating more tools like screeners, and we haven't been raising our price. So we're always trying to consistently keep our prices the same, but we have been adding a lot of stuff to help you guys out, like with we're purchasing fundamental data right now. We're planning to purchase ETF data, mutual fund data. So what we're trying to do is keep continuously add value to the product. If you guys, anybody wants, it's a free trial. You show up, you take a free trial, for 7 days. You could also schedule a demo. So I would get on there, answer any questions, and demo the product for you.
Very cool. Well, again, everybody, we're really grateful you all spent time to join us. I'll drop Twitter and website links into the chat, and I look forward to next week. I think Jake will be on next week, and I think he's got a really cool guest lined up for that. More on the charting and short-term day trading side of things. So thank you again, everybody, and have a great Sunday.
Great, thank you, guys. Thank you for joining us.
Thanks, Dimitri. It's been a blast. Take care. Okay. Have a good night.
Thanks, Dan. Have a good night. Bye.